What's up, everyone? Eric from SprinkleBit here. Sure that you guys saw that we uploaded a new design to the website today, so I figured we might as well try some more new stuff, and I'm going to do a quick video analysis of the current market conditions. If you guys been on SprinkleBit the past week or so, you might have seen that I've done a couple market updates, posting some screenshots with some trend lines and key levels to look out for. This time we're going to do it in a video just so you guys can hear me talk. That gives me the chance to explain things a little bit better and a little bit more, and as well as you guys get the chance to see how to go about analyzing the charts and finding the key levels. Also try to teach you guys some technical analysis on the way as we post more of these video analysis. With that said, we're just going to jump right into it. In front of me, I have the S&P 500 chart. You can find this by typing in SPY in the search field here. And that'll give you a chance to look at this chart and draw some trend lines of your own or some levels on your own that you can keep paying attention to as we go. All right, just to give you a quick overview of the chart that we're looking at, you can see it's ranging from about October 2015 till now. We started the year pretty rough with a big decline in relation to the falling oil prices. Then right here in the middle of February, we started climbing back up again. We were climbing pretty much all the way here till the middle of June. And then we had the Brexit, which caused this big sell-off and dip right here. I'm sure that you guys all remember. Then the markets here in the US pretty much said that we don't think the Brexit is going to be as dangerous for the markets or have as big of an impact as we thought it would. So we started climbing back up again. Here you have this 2-month summer range where pretty much all of Wall Street was on vacation. So I think we had like 40 days or something without more than a 1% move. So that was rather boring. And then beginning of September is here. So this is pretty much where we're at right now. I'm currently on the 1-day chart. So what I'm going to do is that I'm going to skip down to the 60-minute chart just so we can really dive into what's going on currently. And if you've seen my market updates the past week or so, you might have seen that I've mentioned that we're currently trading in a range, and the key levels are 211.30 till 214.70. The 211.30 level, that's going to be your level of support down here. This is your 211.30 level. And then this is your 214.70. So you can see that after we broke that level to the downside on October 11, we've pretty much just been zigzagging in between those key levels or trend lines, if you may. So what I think will happen from here is that if we break above this 214.70, I think we're going to be back in this range. The range that's the 214.70 till 217, about right here, a little bit over 217, 217.50 to be correct. It certainly looks like that could be happening. We tried it here once so we can see if economic news are positive and earnings keep beating, if we can break above this and then start trading in this new range. On the flip side, what could happen is that we could move back down here and still keep the range going, or we could break this to the downside. If we break this to the downside, then things are starting to look a little bit more scary. I'm going to jump back out to the 1-day so you can see what I think will happen if we break the 111.30 to the downside. If we break that right here, I think we will keep falling till right around 207. If you guys can see this, you will see that the 207 level is right about the same as where we have the 200-day moving averages. Once you learn more about technical analysis, you see that these moving averages often work as either support or resistance. And in this case, I believe that if we break that 211 level to the downside, that we could keep falling all the way down to 207. It is also possible that we'll fall all the way down here to the Brexit level, which is right below 200, 199 level. But hopefully, we won't see that happening. All right, jumping back to the 60-minute. I think we're going to stay in this range. The ones that I mentioned, the 211.30 to the 214.70 until after the election. There's a lot of uncertainty right now, and I do think that, if it seems like Hillary is going to win, the markets are favoring a Hillary win right now. So I think if she keeps gaining in the polls, that we could break above this level. And if she wins, I think we'll have a good chance of reclaiming these all-time high levels right here, about 220 on the SPY. If Trump wins, on the other hand, the market doesn't really like a Trump win as much. So in the case of a Trump win, I think it could get a little bit more ugly, and we might see a fall to the downside. Anyways, those are the key levels that you should be watching out for right now. I hope that was helpful. I hope that you learned something, and we will keep paying attention to these key levels and just trade and make the adjustments that we need accordingly. That's it for now. I'll be back. I'll see you guys at SprinkleBit. Have a great day.